Ladies and gentlemen, crazy news in the markets. We have companies like Robinhood falling 20% in a single day, SoFi dropping about 12%, the S&P 500 about 3%, NASDAQ closed down 4%, and essentially every single tech company, crypto company is falling by large double digits. It's an incredibly red day. But with news like Robinhood going down 20% in a single day, this could potentially drive out more than just nerves. This could also be fundamentally driven. So I want to talk to you guys about this and give a little presentation, first starting with the great and powerful Peter Lynch, so that we can get ourselves set on the exact same mindset of what I'm going into this with.
And history is the important thing you learn from. What you learn from history is the market goes down. It goes down a lot. The math is simple. There's been 93 years a century. This is easy to do. The market's had 50 declines of 10% or more. So 50 declines in 93 years. About once every 2 years, the market falls 10%. We call that a correction. That means that's a euphemism for losing a lot of money rapidly, but we call it a correction. And so 50 declines in 93 years, about once every 2 years, the market falls 10%. Of those 50 declines, 15 have been 25% or more. That's known as a bear market. We've had 15 declines in 93 years. So every 6 years, the market's going to have a 25% decline. That's all you need to know. You need to know the market's going to go down sometime. If you're not ready for that, you shouldn't own stocks. And it's good when it happens. If you like a stock at 14 and it goes to 6, that's great. You understand the company, you look at the balance sheet and they're doing fine, and you're hoping to get to 22 with it. 14 to 22 is terrific. 6 to 22 is exceptional. So you take advantage of these declines. They're going to happen. No one knows when they're going to happen. It would be people tell you about it after the fact that they predicted it, but they predicted it 53 times. And
so beautifully said. I'm sure many of you guys have seen this video. In fact, the extended interview that he ends up doing, or the speech that he ends up doing. But it is very important to go back to those basics, especially in the times whenever you are starting to feel a little bit nervous or concerned about your portfolio. That being said, you want to hold fundamental companies and also try to add to them whenever they're down. SoFi here down 11% on the day, but over the last recent run, okay, this is just from January to the beginning of March, it is down 39.5%, almost breaking the 40% down mark, okay? Robinhood is down 46% over this last little run, just from February to March. In 1 month, down 19.79% on the day. Like I said, this is across the board, and the fear and greed index is now pointing to a 15, which is an extreme low that we haven't seen since October of 2022. Now, why does that date sort of matter? Because it was quite the dip during that 2022 period. In fact, the lowest point of that area was in October. So you can see why falling down to this 15 mark could potentially spell that whenever people are getting very fearful, potentially this doesn't mean that this is going to be drawn out for 6 or 9 more months. This could actually see a reversion pretty quickly. And most times whenever people are feeling their most fearful is usually whenever things start to course correct. Now, in my opinion, this does not mean to dump in a lump sum all of your cash into the market today. What this means is that you should probably set up some form of a weekly DCA where you can continue to buy in quality names that we all know and love. For me, I just recently put out a video, and the 4 names that I continue to add to are Google, Nvidia, SoFi, and Robinhood. It's important to continue to add if there's larger and larger drops, so you don't want to just expend all of your cash trying to buy what you think is the perfect dip. Like Peter Lynch said, no one knows when it's going to drop or when it's going to stop. Now, unless there's a fundamental problem, this is a different story. See, Robinhood actually agreed to pay $26 million for FINRA allegations, and what they actually said to the press here was, "We are pleased to resolve these historical matters, many of which date back as far as 2014, and which Robinhood Securities and Robinhood Financial have since remedied. Robinhood will continue to democratize finance for the next generation of investors." But if this was a financial impact to their Q1 2025, then I would be a little concerned. However, that might not be the case. This was literally from Robinhood's investor relations team. The settlement amount was fully accrued in 2023 and 2024, meaning it is not going to show up on their numbers for the 2025 numbers. This has already been accounted for. It's already absorbed. So there's no financial impact, and yet the stock is down, 20%. Now, this isn't just the only fundamental problem, right? If you're a financial services company, some of what you're actually going to see is that if there is a slowdown in markets, if retail stops trading as much as they are currently, then they are going to see, financial declines because there's just not as much trading activity. I'll try to take a look at that as well. But let's go ahead and look at SoFi really quickly. The only news that we have literally on SoFi, other than their securitizations of last week, which were all very positive and that the loan markets were still very strong, was Anthony Noto tweeting twice that were pretty interesting to say the least. He does not tweet often unless he's talking very specifically about, sports or something like this. These seem to be a little bit cryptic. Now, on this day, March 8th, it's a whole new day. This is the one that I really wanted to point to because the OCC had also posted the day before a couple very interesting things that have impacted SoFi going forward. This was a letter that came out from the Office of the Comptroller of the Currency that rescinded banks' abilities to custody crypto assets, okay? They also have things that they can also hold stable coins as well as act as nodes for verification networks and engage in stablecoin activities such as payment transactions, okay? So very, very good news for SoFi. They've made it very apparent that they want to get back into the crypto space. However, even though their entry back into crypto might be very exciting, if crypto is falling, investors seem to not want to care about that, even though it has seemingly been something that is going to stay around for much longer, especially if the United States government is starting to dig its heels into cryptocurrency more and more. Now, let's take a look at website traffic because it's one of the ways that we can see forward-looking statements, essentially. And for companies like Robinhood and SoFi, these translate very well to overall growth rates because if more people are on the platform, they are doing revenue-generating activities, right? So let's take a look. Website traffic for SoFi in February was the highest they've ever seen, second to January numbers, which came in at 19.5 million visits to both their desktop and mobile. Okay, so the 2 months that they've ended up showing off so far have both been generous record-breaking numbers, okay? Anything before that has seen high 16s, maybe mid 16s, but hitting essentially 18 million and 19.5 million for the first 2 months is definitely showing off some very exciting numbers. But let's go back even further and look at every quarter for website traffic. Obviously, it's been going up quite well. But in Q1 of 2025, we're seeing a drastic step up in those numbers, okay? Now, for March, we don't have these statistics yet. We'll have to wait till the month actually finishes. What I'm doing is taking an average of both January and February to try to find how much they'll actually see in website traffic. Potentially, it could be a little bit lower. I doubt it'll be anywhere near being close to 48 million. However, it would need to be, the worst month that they've ever seen over the last year and a half. Now, going to the Robinhood numbers, it's another amazing site. So February, very similar to SoFi, is the third highest they've ever seen, only, third to December's numbers, and then January as well. Okay, so what we're seeing already in these 2 months versus these 2 months of November and December, very similar numbers, only slightly higher in both accounts of Q1. So if March comes in very depressed, okay, we're talking in the range of somewhere where we saw October come in at, we are going to have a very similar month of what we saw for Robinhood in Q4, which was an amazing quarter, by the way, because of the level of activity actually drew out a bunch of growth. And whenever we break this down on a quarterly basis, you can see exactly what we're talking about here. So Q4, much higher, much higher than the other months that they've seen previously. And then Q1, once again, even higher if we take the average. Potentially March could be lower than the 2 quarters combined, so we probably need to lower this average. But even if it comes in somewhere where Q4 is essentially coming in at, this will be a very successful number for the amount of visits that Robinhood is actually seeing. Now, ladies and gentlemen, just as I was editing the video, the February numbers had dropped for Robinhood, and what we're ended up seeing is 25.6 million funded customers. Assets under custody had fallen a little bit, but not due to customer deposits. Customer net deposits had still come in at a 28% annualized growth rate, okay, or 4.8 billion new dollars. So this drop is due to market gains or market losses, okay, which we might even see even further in March. but this doesn't necessarily spell anything too bad. Going on to their actual trading volumes, you can see that the month over month for equity and options is down 1%. But this was February numbers, which means there's only 19 trading days versus the 20 trading days that we usually see. Okay, so if you actually look at their daily average volume, it's actually reaching a 4-year high for both options and equities. Now, crypto, on the other hand, is not as high, going down to 14.4 billion, but yet it's still very high, above the $10 billion mark. Potentially, March is going to bring it below 10 billion. We'll have to see. But this could spell a decent quarter for Robinhood still for the crypto side. And lastly, which I think is very interesting, in February, margin book hit a new all-time high. Now, a lot of this is not actually just growth from people who are taking out more and more margin, but people who potentially were not using margin with Robinhood before, but using it at other brokerages that are now bringing it over to Robinhood. Now, ladies and gentlemen, I'm not a financial advisor. I'm certainly not your financial advisor. I'm only talking about what I'm doing for my portfolio. However, historically speaking, time in the market has done better than timing the market.